Another area of the market that's been outperforming, well, actually, Dan just mentioned it. Small caps. Our next guest says they are the place to be amid broader volatility. Let's bring in Nancy Prial. She's the co-CEO at Essex Investment Management. Nancy, good to see you again.
Nice to see you, Melissa.
So we were just talking about small caps being more domestically oriented. Is the macro sort of backdrop that you're expecting one of recession, one of hard times for the U.S. economy, for hard times globally, and therefore you want to be more domestic?
Well, we think that we do want to be more domestic here because we think there are a number of drivers in the U.S. economy that even with what we think will be a hard landing, hopefully not a deep recession, but certainly a hard and a bumpy landing, the U.S. economy will look better and be stronger than most of the other economies, particularly those in Western Europe for the obvious reasons of Russia, Ukraine. We think that small caps in particular are really well positioned for this environment because they are levered to that domestic economy, and more importantly, they're levered to the industrial economy, which we believe will be leading us in the growth for not only the next year, but perhaps the next decade.
Nancy, it's Karen. Thanks for being on. So I don't follow the metrics of small caps that closely. Can you tell me where they sort of trade now relative to where they were at their peak?
Right. So small caps are still extraordinarily cheap. In fact, they are selling at valuations on both an absolute and a relative basis that are similar to where they were selling back at the 1999-2000 point. So they're selling at, depending on which part of the small cap universe you're looking at, anywhere between 10 and 13 times this year's earnings. Similar number on next year's earnings because the estimates for next year are pretty conservative. On a relative basis, they're selling at a very low percentage compared to the S&P, compared to their large cap counterparts. They're also under-owned compared to those larger cap stocks, particularly those great large cap growth stocks that have been driving the economy for the past decade or so. And so we think that with that valuation discount, with the better growth prospects, and with the lack of ownership, that puts them in a great position to appreciate as their earnings come through.
Just one follow-up to that. What is considered a small cap? What is the criteria that makes, I don't even...
Right. So it's a very tricky question these days because the traditional definition is that which is in the Russell 2000. Today, that encompasses stocks up to about 11 or 12 billion in market cap. So as the market has gone up over the years, of course, the definition of small cap goes up. We define small caps as stocks between roughly 250 million market cap and 7 billion on the high end, so not quite as large as where the Russell 2000 is. More importantly, one of the characteristics of small caps is that they tend to be less well followed, less well understood, less well known, and that's an important non-quantitative, but an important qualitative characteristic about the small cap space.
Within small caps, you like industrials, energy, and those involved with rebuilding the infrastructure. And I'm wondering, Nancy, because overall you think the markets are actually in for what sounds like a seasonally positive period, although the first quarter is going to be volatile. Do you want to be, will small caps outperform, their larger brethren during this period of seasonality?
We think they will. Certainly, small caps have been outperforming their larger brethren over the most recent period. They've outperformed in October, they outperformed in September, they outperformed in the second quarter. A lot of that is due to the valuation and due to the fact that the earnings are coming through. They're more domestically oriented, so the dollar has been less of a headwind for them. And we would hope that that outperformance will continue as we go forward. As we said earlier, we think that we are in an economy that's going to be led by this industrial sector, driven by the forces of infrastructure rebuilding, reshoring of manufacturing, building out of supply chains. And again, that will benefit these companies. So they'll get recognized, and we think that the earnings growth, as it has been, at least at the beginning of this earnings season, should be better than that for large caps.
Nancy, thanks for your time. Good to see you.
Thank you.
Nancy Prial of Essex. Guy, how you feel about small caps?
Well, we've talked about them. Go back to January of 20 before everything cratered. The IWM topped out around 166. Now, this June, traded down to 166, bounced. We just did it again on September 30th. So I have a double bottom, past resistance becomes support. So this has some legs here. I mean, I don't think it's going to trade north of 210, but it definitely can make a push towards 200 in a tape that I still think is going to go up for the next week or so.
Historically, I've used small cap stocks as a hedge against things like emerging markets and things that are very growthy. And if you look at where the peak was on the IWM, really kind of coming out of COVID, it peaked as we were getting that reflation and that burst in rates in the first and early second quarter of 2021. And as the dollar has rallied, and you'd think this would be small cap positive, small caps have actually run into a lot of pressure. A lot of people feel like small cap companies, domestic companies, they're going to be okay. And in fact, they're very well insulated. So if anything, I think they've disappointed in a period where I think they should be doing better. But I would agree that the exposure here are certainly the sectors that we were just talking about with the Dow. I mean, I think this is a lot of the small cap exposure.
What kind of trade do you have on in small caps?
You know, I don't. And, you know, one of the things, and I don't look at investing in small cap. I think they're really hard to invest in a single stock basis. But if you do buy into some of the things that these guys are talking about as it relates to rotations, I think the IWM is a way to play it. I do think that relative strength is really interesting. If it goes back to those lows that Guy just mentioned and holds, I think you want a piece of that as you kind of think about 2023 and how you're allocated towards U.S. stocks.